Hi, this is Alessio. Hope you're well. In this video, I want to give you a very quick update on the major stock markets. I want to show you what I think is likely to happen in the next few weeks as we head into the month of March on the stock markets. And I also want to bring to your attention this particular chart you're seeing here and what it likely means for the markets, plus also this chart you're seeing here and what it also could be a warning for the markets. And what this chart and this particular chart mean for the markets as well. All right, guys, join me. Alright guys, welcome back. Now before we dig into the charts and also explain to you what the significance of this chart here and this one here also means for the markets, I just want to begin by first saying that as the market took out the 5,000, came to 5,040, a level which we expected by the way in the member videos, I began to take off some profits. So as we can see here, this is my profit and loss account showing both the realized and unrealized gains. So in the first account, so far this year, I've banked in this account about £61,000 of profit. There were also some losses, so about £2,000 of losses approximately there, which produced a net realized gain of £59,000. And in the second account, there was a net realized gain of about just under £13,000. So that's a combined net gain of about £72,000, about $90,000. Now, as far as the unrealized profits this year is about £30,000. There's about £2,000 of, again, unrealized loss, which produces a net unrealized gain of about £27,000, with in the second account about £5,000 also unrealized gains. That's a combined total of about £33,000 or about $41,000. And I'm going to explain why I'm planning to take off more profits in the next few weeks, depending on what the market does here. So before I go on to this particular chart here, and also this particular chart you're seeing here, first of all, let me begin with this. This is the wave count that I showed our members about a year ago. In fact, exactly 1 year ago. On the 19th of February, 2023, here's what I said to our members back then. I'm going to play the clip, we'll come back. But overall, I'm looking for a wave 5 move, taking us towards all-time highs. And I know it sounds pretty optimistic, I understand that, but this is my higher probability expectation. It's my base case. There's a lot of data. There's a lot of the data that suggests there's a high probability of a rally, of a 20% rally in the stock markets by the end of this year, at least by December of this year. All right, guys, as you heard, exactly 1 year ago, I was calling for the market to eventually head higher in its wave 5 to make all-time highs by the end of 2023. Now, of course, it took a bit longer, as we know, to hit all-time highs, but we got there eventually. Now, I should say last year, even though we got the majority of the calls on the market movements correct, so for example, last year I was right to be bullish again in January, and also in the spring of last year I got very bullish on the market here, and then I began to warn of a correction in the market back in July. Nevertheless, I did not get everything correct last year, so I did not get it right back in October of last year. I got quite bearish back then, but as I'm sure you know, when you're dealing with a chaotic and uncertain market, it's impossible to be right every single time. So I do my best to follow my rules of analysis, but of course we can never be right every single time. Now over here, as the market jumped off here, we got neutral on the market, and eventually we got bullish on the market after we took out the summer highs. So now the big question is, after the strong rally we're seeing here in the stock market, which by the way, we're hitting overbought conditions, overbought, over bullish, and divergences. So let me show you this. If we go on the lower time frame chart, we're seeing a number of divergences now on the lower time frames. For example, this 120-minute chart. We can see as the market's rallied here, making higher highs, the MACD here is not making higher highs. As a matter of fact, it looks flat on this chart. So as I'm sure you know, negative divergences are typically signs that the force of the uptrend is weakening here, and we could see a potential pullback. And I'll explain to you in a few minutes what I think this chart is saying to us as well. Now, before we go on to that, let me first of all discuss this chart of dumb money sentiment. Now, dumb money sentiment, especially among money managers, got extremely bullish, over bullish. And as I'm sure you know, I mentioned this, you may recall, in July of last year, I showed you this particular chart, and I warned, and I said, look, money managers, dumb money, is getting extremely bullish here. And whenever these fat cats in Wall Street, whenever they become extremely over bullish, that is a time to be extremely cautious as well. So typically when I see the dumb money sentiment going above 90 or 100, like it did in July, August of last year, warning us of a potential correction in the market. And we had a similar warning in December of last year, although the drop we had was very shallow. So it doesn't always work out to be a very strong or deep pullback. Sometimes the pullbacks can be very shallow in their movements. But nevertheless, we're seeing once again overbought, over bullish conditions here with extremely optimistic and greedy conditions among money managers and dumb money and Wall Street in general. So this is a time, in my view, to be extremely cautious because, as I'm sure you know, dumb money sentiment is a contrary indication. So this is a time, in my view, to de-risk, in other words, to reduce risk. Why? Because as the sentiment gets extremely over bullish, as we can see from this sentiment cycle. So sentiment cycle, as shown to you by this chart, shows to the different emotional stages in the market. So different emotions in different stages of the market. And I think the stage we're in right now, I think there's a high probability we are in the euphoria stage of the market. Probably might even gone beyond the euphoria stage. So probably the champagne cork popping stage, or where Michael Scott is twerking his bottom or something like that. In any case, I think we are right now in the point of maximum financial risk. In other words, the point in time where we could see a likely pullback or a correction in the market. So I do think the time has come to reset the sentiment cycle, to go from euphoria to anxiety, denial, and fear. And I think that's going to come soon in the next few weeks. Don't get me wrong here. I'm not saying that the market has to crash and, drop severely. No, all I'm saying is we could expect some kind of a correction or a strong pullback to reset the sentiment cycle and perhaps go back down to the maximum financial opportunity stage again. But I do think we are right now very likely in the point of maximum financial risk, shown to us again by dumb money sentiment, but also by divergences, and also the fact that usually when markets accelerate in something like this, and we're seeing strong acceleration with overbought conditions and overstretched conditions here in the stock market. And in a situation like this, when the stock market takes out its previous all-time high, as you can see right there, typically markets come back again and retest that all-time high. In fact, I had a chat with Charlie Burton some months ago, you may recall in our videos, and Charlie Burton mentioned that usually when price takes out its previous all-time high or a key resistance level, it likes to come back and revisit that all-time high or key resistance, which is now support. So that prior all-time high is now support or a major support level. So for me personally, I think the odds are quite high that we're going to see a pullback or a correction to come back and retest that all-time high near 4,800, approximately there, or at the very least to test this 50 simple moving average you see on my chart. See that white line on my chart? That's the 50 simple moving average. Price usually comes back and tests the 50 simple moving average after strong rallies like this. Let me show you an example. So in the strong rally we saw in the S&P in 2021, notice that as the market pushes strongly higher after these strong rallies here, you see, typically then the market comes back and then retests which level? The 50 simple moving average. In fact, moving averages on a chart can be compared to magnets. So for example, price moves away from the averages and just like a magnet, it gets pulled back to it. Notice how many times, for example, the price in 2021 came back and retested. As we can see, I'll do this in different color. So for example, we came back, retested the 50 simple moving average here, many times in fact, as we can see on the chart, and even here as well. So that's generally what I'm looking for the next several weeks as we head into March. Probably by the middle to the end of March, I think it's quite probable that we're going to see a pullback to test this 50 simple moving average here you see on the chart, which by the way is going to catch up with the price eventually. But I think this level, again, the 50 simple moving average, and very likely the all-time high is going to get tested in the next several weeks as we head to the middle to the end of March. Even if the price grinds a bit higher, I still think a pullback is much more likely in the next few weeks, which again should reset the sentiment cycle from euphoria back to some fear and panic. So even though I think it's quite likely for the price here to come back and reset support level, as I mentioned, this key level near 4,800 in the next several weeks. Nevertheless, I am not saying it's a good idea to short this market. All right, guys, as I'm sure you know, it is very dangerous and risky to stand in front of a freight train. All right, guys, so shorting a market like this with strong momentum, strong positive momentum like this is very dangerous. All I'm saying is that personally for me, based on what I'm seeing on the chart, it may be a good time to de-risk, in other words, reduce risk, as I explained in this particular video, because the odds of a potential pullback or correction are increasing after strong rallies like this. And by the way, I think once the price does come back, so I think even though I think it's quite likely for the price to come back and retest the prior all-time high, I'm actually looking potentially to establish a small long position here. So should we get some kind of a pullback to the support level here, again, the all-time high here, I'm considering establishing a small long position with a tight stop loss. Now I'm saying considering that because I need to wait and see how price is going to pull back and drop. The structure of that pullback or drop in the next few weeks is going to be very important. And I've talked about this in much more detail in a member video because I've explained the wave counts and the potential risks in the market the next few weeks in much more detail. So go ahead and check out the member video. And by the way, if you're not a member, you can join a link you see right there. All right, guys, hope this video helps. If it has, please give it a like and subscribe. And I look forward to seeing the next video update. Bye for now.